Hello traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of June 30th. Just a heads up, it is a Canadian holiday on July 1st, and it's a U.S. holiday on July 4th with an early close at 1 p.m. Eastern on July 3rd. So be aware of that if you're day trading, swing trading. And each week I go through the same process, just helping me decide how aggressively I want to be trading. Do I want to be trading at all? Do I want to be trading aggressively or scaling back? And there are some watch lists you can check out. These will be updated early in the week. Current swing trading watch list and the best swing trading stocks list. This is high momentum names. This is ones that are, I haven't updated it in couple weeks, I think. So it was ones that were setting up and potential patterns for mostly earnings trades. But we'll look at the new batch coming up. How the indices are doing. So let's check that out. Everything in an uptrend with a recent surge. We had talked last week how we'd started to level off just a little bit, and nice pop this week. So there wasn't really any reason to back off. We hadn't started reversing or anything like that. So still overall uptrend, favor long trades, all the indices moving up quite well. Let's talk about Bitcoin for a minute. This is a 2-day chart just so we could see a bit more data back here. These were the old highs right around 110,000 and popped above it briefly. Now we're basically stuck in a range here. So last week had talked about, or it might have even been the week before, this was a interesting area right around 100,000 because it's kind of the low of the recent range. So if we get a bounce off it, that sets up a short-term trade. The ultimate goal is a breakout above this range, a breakout and hold. I'm not interested if it just peeks its head above and then drops right back in. I would want to see breakout, hold in this area or above, and then start moving up again. That's the signal for the next major wave. That hasn't happened yet. We are still stuck at the prior high. If this starts moving lower, then we have areas down here which become of interest to potentially get involved. But right now, at this area, I would not want to establish any new positions. It's either down here or wait for the break and move up. If this continues down, would exit and look to see if we get more favorable entries either here or potentially way down here. And I do have a full guide on, if you go to TradeThatSwing.com, go to investing and how Bitcoin moves. You can see every cycle, how far it typically pulls back, how far it typically runs after those pullbacks. We've broken down everything. So definitely check out that article to give yourself some, perspective on moves, what could happen. And then the big thing to realize too is that those big 70% drops do occur typically every couple years or every few years. So, we could go up, we could go down. We'll see what the price action reveals. That's why I wait for the setups. I don't just come up with opinion and trade it. I'll wait for the levels that I'm looking at to be confirmed or validated. Then you take a trade with what you believe is a positive risk reward at the time and let it play out. The gold has, I would trade this as a range now. I would no longer consider this an uptrend. We had the big move up, we had a pullback, we had a big move up, we have pulled back significantly off that level. So to me, we are now chopping sideways. It's a range until proven otherwise. If it drops below, pulls back, holds, then we're in a downtrend. If it stays in this area, we get the bounce off the bottom, great. Maybe we move back up toward the top of the range, similar to Bitcoin. But then the ultimate thing is it has to break out and hold. Once that range established, the gold miners, a little bit shorter term. It did make new highs over here compared to this high, but we have a little bit of a range. I call this a double pump, actually. But the fact that it barely made progress above this, I would say, kind of we're in that overall ranging environment too. So not as nice as it once was. Let's look at the market health indicators. This is the S&P 500 chart. Below it, I have a few things that just look under the hood. Volume, not important to me at the moment. This is rate of change, basically the percentage daily movements of the S&P 500. Low volatility correlated with uptrends. High volatility correlated with downtrends. So we are in a now lower volatility environment. We're not seeing these big sell-off days like we were back here. And that's a positive thing. This is cut off a little bit. Some of these are much bigger down days. Some of these are big up days too. I'm not as concerned about the big up days. It's more, limiting those down days. So you can see here, pretty quiet, and we have a big up move. And you can see over here, pretty quiet, nice up move, quiet, nice big up move. Gets more volatile during the drops. So yeah, we're uptrending behavior at the moment. This is the advanced decline line, zoomed in a little bit. You can't see the historical, but we're, moved up all-time highs way back here. And then again here, made new all-time highs before the S&P 500 did. Those are positive divergence. They indicate that the S&P typically will move back to its all-time highs within a decent amount of time, and they did. So we are at all-time highs again on the S&P 500, and this is still moving well. Nice, strong move up. If it starts to not move up while the S&P is moving up, that indicates that the index is showing us maybe just the picture of a few big stocks as opposed to the broader market. But this is moving well, so this shows lots of stocks are moving up, and the S&P is as well. Up volume divided by total volume. I accidentally cut this off a little bit, but it doesn't matter. We have no signals here. We're looking for extremely high readings up at 90 or extremely low readings down at 0.9 or low readings at 0.1. And you can see we're just in the range here. So not important at the moment. This is important for, at this point, if we started to see really low numbers, that would indicate strong selling pressure. Because if it hits down here, that means only 10% or less of the volume that occurred that day occurred in stocks that are moving higher, or the flip side of thinking in 90% of the stock volume occurred in stocks moving to the downside. So really strong selling if we get a 0.1 or lower number. 0.9 or higher is the opposite. 90% of the volume that occurred that day occurred in stocks moving up. Very strong signal, huge money coming into the market, flowing in, stocks moving up, volume all there. So we just had no signals except for one. There was one way back here which indicated the potential bottom. And that was our last signal. No signal since then, not telling us anything. This is percentage of stocks above their 50-day moving average. Get my head out of there for a second. Red is all U.S. stocks, and turquoise is all U.S. stocks. Red is S&P 500 stocks. You can see both of them right around the 70% mark. So that means 70% of stocks above their 50-day moving average. Generally much easier to make money on the long side when most stocks are moving up and above their 50-day. Nothing magical about a 50-day moving average, but it does tell us basically if things are kind of moving up or not. And you can see we made the shift here, and since then, I would say this was a fairly easy money environment to be trading in. Lots of things moving up, pretty aggressively, and those are the environments we want to be trading in. When it's like this, don't want to be trading on the long side. So what am I doing right now? Well, I'm going to continue trading stocks on the long side. Bitcoin, not of interest at this exact price. We talked about those ranges near the low of the range. Interesting if it bounces off there. I'm not going to just put out an order at the bottom of the range. I want to see it maybe drop below a little bit and then start moving up, or hit the bottom, start moving up. That gives me a nice stop loss location below that recent low. Or if it starts breaking down, then we have some potential areas of interest on those other ranges that we could have some possible trades in. And gold, not of interest at the moment also, just because it's, you know, stuck kind of mid-range. There's no reason for me to trade in there. I'd rather trade it at the bottom or wait for the breakout and hold above the top of the range. And always day trading, swing trading. If you're interested in anything of how I trade, you can check out the trading courses section. We have stock day trading course. The swing trading course is very popular for assessing market health like this, and strategies for picking stocks that take advantage of those market conditions. Stock and day trading courses, stock and forex day trading courses also popular because they give us opportunities every day, as opposed to swing trading, which is a little bit more when market conditions are good. Maybe we're very active like right now, and when they're not so good, we have these periods of inactivity. Have a great trading week out there. Remember, it's a shortened trading week, both in Canada and the US. Get some days off. Happy trading out there.